Hey crypto investors, welcome to Top Crypto Central, where we unlock the secrets of the digital currency world. Today, we're diving into a topic that's buzzing with potential: how to invest in crypto in 2024. So, if you're new to this channel, hit that subscribe button and let's embark on this exciting journey together. Over the past few years, cryptocurrency has transformed from a tech-savvy niche to a booming global phenomenon. With Bitcoin hitting all-time highs and new tokens constantly emerging, the crypto landscape in 2024 is more vibrant and promising than ever. But for those just starting out, this world can seem like a vast and complex maze. That's exactly why we're here today. Whether you're looking to dip your toes into Bitcoin, Ethereum, or any of the exciting new coins on the horizon, this video is your comprehensive beginner's guide to investing in crypto in 2024. We'll cover the basics, the must-knows, and the how-tos, all to help you navigate the dynamic waters of crypto investing with confidence. From understanding the very fabric of digital currency to making your first investment, we've got you covered. So let's gear up and get ready to decode the world of cryptocurrency investing in 2024. Now, let's start at the very beginning: understanding cryptocurrency. In simple terms, cryptocurrency is digital or virtual money, which takes the form of tokens or coins. Unlike traditional money, it operates on a technology called blockchain, a decentralized technology spread across many computers that manage and record transactions. This tech not only makes crypto secure, but also incredibly transparent. Think of blockchain as a digital ledger, but instead of being kept in one place, it's distributed across the vast network of computers. This ensures that no single entity has control, and every transaction is recorded and verified by multiple nodes in the network. It's this groundbreaking technology that forms the backbone of cryptocurrencies like Bitcoin, Ethereum, Chainlink, and Solana. Bitcoin, the first and most well-known cryptocurrency, set the stage for others like Ethereum, known for its smart contract capabilities, Chainlink with its decentralized Oracle network, and Solana, famed for its high speed and low-cost transactions. But let's not forget the emerging stars of 2024 like SEI, Celestia, Arweave, and INJ, each bringing unique innovations to the table. Keeping an eye on these could give you an edge in the crypto market. Now on to something crucial in crypto investing: setting your investment goals. It's not just about picking coins, it's about understanding what you want to achieve. Are you in it for quick gains, or are you playing the long game? This is where your investment goals come into play. Every investor has a different appetite for risk. Some might be comfortable with the high volatility of the crypto market, while others might prefer a more conservative approach. This is what we call risk tolerance. It's essential to gauge yours before diving in. Another key aspect is your investment time horizon. Are you investing for a few months, a year, or several years? This will guide your investment choices, and remember, in the world of crypto, diversification is your friend. Spreading your investments across different types of cryptocurrencies can help manage risk and tap into different market opportunities. Alright, let's delve deeper into the power of crypto diversification. In the realm of investment, diversification is a strategy to reduce risk by allocating investments among various financial instruments, industries, and other categories. In crypto, this means not putting all your funds into one type of coin, but spreading them across different market caps, large, mid, and lower cap cryptocurrencies. Large cap cryptos, typically with a market cap over $10 billion, are considered the giants of the crypto world, like Bitcoin and Ethereum. They are often seen as more stable. Mid-cap cryptos with market caps between $1 billion and $10 billion offer a balance between the stability of large caps and the growth potential of lower caps. Lower cap cryptos, under $1 billion in market cap, while riskier, can provide significant growth opportunities. Most successful crypto investors adopt a diversification strategy to balance their portfolio's risk and reward. A commonly used diversification model might look something like this. The power of diversification also lies in investing in cryptos with different use cases. Large-cap cryptos like Bitcoin often serve as digital gold, a store of value. Ethereum, with its smart contract capabilities, powers decentralized applications. Mid-cap cryptos might be pioneering in specific sectors like finance, gaming, or supply chain. Lower-cap projects could be working on cutting-edge technology or niche applications. By diversifying, not just in terms of market cap, but also in use cases, you're not only spreading your risk, but also tapping into different growth avenues in the crypto ecosystem. As the market evolves, some of these cryptos could redefine their sectors, leading to potential gains for well-diversified portfolios. Remember, diversification in crypto isn't just about spreading your investments. It's about smartly navigating a highly volatile market. By diversifying your portfolio across different market caps, you're not just playing it safe, but also giving yourself a chance to capture growth from various segments of the crypto market. And as the market evolves, so should your strategy. Stay informed, stay flexible, and adapt your approach as needed. Setting clear investment goals, understanding your risk tolerance, and diversifying your portfolio are the building blocks of a successful crypto investment strategy. So, take your time to reflect on these before making your move. Before you put your hard-earned money into crypto, there's something critical you need to do. Research. It's not just about picking coins based on popularity. It's about understanding what you're investing in. This means delving into white papers, which are like a blueprint of a cryptocurrency. They detail the purpose, technology, roadmap, and team behind the project. Start by reading the white paper. It can give you insights into the coin's utility, innovation, and long-term viability. Next, keep an eye on market trends. Cryptocurrency is a fast-paced world. Today's underdog could be tomorrow's leader. Also, don't forget to research the team behind the cryptocurrency. Their track record can speak volumes about the project's potential. Staying updated with the latest crypto news and trends is equally vital. The crypto market can be significantly influenced by global events, regulatory news, and technological advancements. So, staying informed helps you make educated decisions. Next, let's talk about where you'll be buying these cryptocurrencies. Crypto exchanges. These are platforms where you can buy, sell, and trade cryptocurrencies. But not all exchanges are created equal. Moving forward in our crypto journey, let's talk about the platforms where you'll be trading, crypto exchanges. These come in two main flavors: centralized exchanges, CEX, and decentralized exchanges, DEX. Each type has its unique features, along with its pros and cons. Centralized exchanges are the most common type. They are managed by a central authority or company, much like a traditional bank. Examples include Coinbase, Binance, and Kraken. They are known for their user-friendly interfaces, higher liquidity, and variety of available cryptocurrencies and trading pairs. But with centralization comes certain drawbacks. CEXs require you to entrust your funds to a third party, which can be a security risk. They are also more susceptible to regulations and geo-restrictions. And there's always the risk of central point failure. If the exchange goes down, you might temporarily lose access to your funds. On the flip side, we have decentralized exchanges. DEXs like Uniswap, SushiSwap, and PancakeSwap operate without a central authority. Transactions are peer-to-peer, powered by smart contracts on the blockchain. They offer increased privacy, as you don't have to undergo strict KYC, know your customer processes, and you maintain control of your keys and funds. However, DEXs can be less user-friendly, especially for beginners. They generally have lower liquidity compared to CEXs, and the variety of available assets might be limited. Also, because of their decentralized nature, if something goes wrong, there's no customer support to turn to. Choosing between a CEX and a DEX depends on your priorities. If you value ease of use, higher liquidity, and extensive support, a CEX might be more suitable. But if you prioritize full control over your assets, privacy, and are comfortable navigating a less intuitive interface, a DEX could be your go-to. Overall, when choosing an exchange, consider factors like security. Is the platform known for its robust security measures? Look at the fees. Are they reasonable and transparent? The user interface is important too, especially for beginners. You want something intuitive and easy to navigate. And finally, check the supported currencies. Does it offer a wide range of cryptocurrencies, including the ones you're interested in? An essential element of crypto investing is understanding how to store and manage your digital assets, which brings us to crypto wallets. These wallets are not just places to store your cryptocurrencies. They are tools that allow you to interact with the blockchain network. Think of a crypto wallet as your personal interface to the blockchain. Each wallet has two key components, a public key and a private key. The public key is like your bank account number that you share to receive funds, while the private key is akin to your ATM PIN, which should be kept secret at all times. There are mainly two types of crypto wallets: centralized wallets and decentralized wallets. Centralized wallets are offered by exchanges like Coinbase and Binance. They are user-friendly and convenient, providing an easy way for users to access their funds and make transactions. However, since your private keys are stored by the exchange, there's a higher risk if the exchange is compromised. Decentralized wallets, on the other hand, give you full control over your keys and funds. Examples include software wallets like MetaMask or hardware wallets like Ledger Nano and Trezor. While they offer greater security, they also require more responsibility on your part to manage and back up your keys. Each type of wallet has its pros and cons. Centralized wallets offer convenience and ease of use, ideal for beginners. Decentralized wallets offer more security and control, which is preferred by those who want complete ownership of their crypto assets. The key is to choose a wallet that aligns with your needs and understanding of crypto management. Setting up a wallet varies by type, but it generally involves creating an account and securing it with a strong password. Always remember to back up your wallet. Write down your recovery phrases and store them in a secure location. This is crucial in case you lose access to your wallet. Remember, the safety of your investments largely depends on how securely you store them, so take wallet security seriously. So, you're ready to make your first crypto investment. It's an exciting step, but let's walk through it with care. First, log into your chosen exchange. You'll need to deposit funds, which can typically be done through bank transfers, credit cards, or even other cryptocurrencies. Once your account is funded, it's time to buy. There are mainly three types of orders you can place. A market order lets you buy crypto instantly at the current market price. A limit order allows you to set a specific price at which you want to buy, and the transaction will only execute if the market reaches that price. And a stop-loss order helps you limit potential losses by setting a price at which your crypto will be sold automatically if the market dips. Remember, only invest what you can afford to lose. The crypto market can be rewarding, but it is also unpredictable. Start small and never pour in money that you can't afford to lose. Let's now talk about risk management. Crypto markets are known for their volatility. Prices can skyrocket, but they can also plummet. That's why it's crucial to have a strategy. Position sizing means not putting all your eggs in one basket. It's about spreading your investment across different assets to mitigate risk. And stop losses? They're your safety net, automatically selling off your asset if its price falls to a certain level, helping you avoid larger losses. Also, don't get swept up in the hype or FOMO, fear of missing out. Investment decisions should be based on research and strategy, not emotions or peer pressure. Lastly, the key to success in crypto isn't just about investing. It's about staying informed and educated. The crypto world is constantly evolving, with new developments happening all the time. Make it a habit to follow reputable news sources, participate in online forums, and seek out educational resources. Stay updated with market trends, regulatory changes, and technological advancements. Knowledge is power, especially in the dynamic world of cryptocurrency. Remember, a well-informed investor is a smart investor. Keep learning, keep exploring, and who knows, you might just find your next big opportunity. And that, my fellow investors, wraps up our journey into the world of cryptocurrency investing in 2024. We've covered a lot today, from understanding the basics of cryptocurrency and blockchain to making your first investment, and even diving into risk management. Remember, the crypto market is dynamic and ever-changing, so taking a cautious and informed approach is key. Always do your research, understand the risks, and invest wisely. As we venture into this digital financial landscape, keep these insights in mind. It's an exciting world out there, full of opportunities, but it requires a smart and strategic approach. If you found this guide helpful, make sure to hit that like button and don't forget to subscribe to Top Crypto Central for more insightful content on cryptocurrency and investing. Have any thoughts or questions? Drop them in the comments below. I'd love to hear from you. And for more resources and related videos, check out the links in the description. With that said, thanks for watching, and until next time, stay savvy and keep investing smartly.